No.
Oh, Jesus. This is brutal. It's gonna be a hell of a day. Absolute hell of a day. Morning studs. How we doing? Great day to be great. Great day to be great. All right. So I'm gonna kind of start how I chart for SPX because I've only been charting or playing SPX uh the past few months. So obviously have been doing better, but also had a fucking shit show of a Friday. But whatever. On to the next one. We bounce back. Live and you learn. Wasn't as disappointed as I thought it would be because it was just a technological error and oversight on my part. So fuck me. But whatever. Make that back this week. No biggie. So what I do on my charting side of things is I've started to, and what's really worked for me has started on the macro level, so at least on the daily, and then working my way down to the 5 minute in terms of intervals and time frames and stuff like that. So for me, I essentially every day after the day trading or the closing bell, I will go through and write out how I did for the day, but then also write out a game plan for the next day with SPX. And so with this, essentially, this will kind of hold myself accountable for the next day in terms of looking at key levels, what I'm looking for, what making sure I'm not getting into FOMO or going in with bias, everything along those lines, which I've had just a continuous struggle with on a day to day basis. But over the past few weeks, it's obviously gotten better. So have really tried to figure out what works best, honestly, in terms of the the way that I trade, because I think it is important to chart and trade one as simply as possible, but two, what the way that it fits you and the best way that you can interpret the information that's being given to you. So I was actually talking to Ignio last night a bit about some things that he does versus things that I do, and why I look at things or don't look at things in terms of like influences outside of just like the chart. But anyway, so essentially for the macro side of things in the SPX, what I'm looking at is essentially the daily key levels. And what I mean by daily key levels is really taking a page out of Bueller's playbook and using his charting strategy on that side of things, where determining the key levels of support and resistance from the past few weeks. And so what I have done is, obviously this is going to look like a lot, but when you get it down on the smaller time frame, you'll see how much more beneficial it is, essentially. So you'll see here on the right hand side too is that I write notes on each level so that I know, how often this has happened or how big or how far back the resistance or support is, things of that nature. Now, the purple lines are just key levels. The pink lines are like major levels that have had serious, not serious implications, but have had major moves after it was broken, either support or resistance. And so that's why those are kind of differentiated a little bit as kind of the macro key levels versus the daily key levels. And so that's why I kind of look at this. But then what I do is I try to look at the chart just from as if this was a 5 minute chart. I normally trade on the 5 minute chart, but I'm looking at this at the daily chart as if it was a 5 minute chart. So then I write down, like last night, this is what I'm writing. I wrote down, so you can see it here. Yeah, so this is like my notebook. I have notes from every day for the past, and that's 6 pages each one. So you can see how long I've been doing it now. But it's been working. But so yesterday I put, okay, so we gapped down and then we continued all day. It was lowering price with increasing volume, which essentially obviously means it's a confirmation in that direction, in that trend. The moving averages on the MACD. So down here, you'll see that the moving averages crossed again a day after they crossed to the upside, and they crossed again to the downside just after a day. So obviously the moving averages, convergence and divergence, which is MACD, that is a good indicator of the moving averages and indecision right now, or at least confirmation that we could be continuing a downtrend. So today is going to be very. I'm not going to overtrade. That's my goal, is to not overtrade. But I'll get into that in a second. So, yes, the MACD crossed again to the downside after crossing upside a day ago. Lots of indicators have SPX on the daily being overextended or oversold, even on the hourly. But essentially, what I've been telling myself is only trade with the trend. So until it is completely broken, and I write down what that level is, I said no calls unless it's over 39.98. So I'm trading with the trend until it gets over that point, over 39.98. Now, one thing to note is that the last time that there was a big move like this, as well as this type of volume on a day, the next day was a little bit of a indecision relief type of day before next move down. So I wouldn't be surprised if we got a lower volume, consolidation, slower day today, um, just because of how aggressive yesterday was. But so the biggest key levels for me to look at right now are obviously the 39.13 level, and then 3900 just for the psychological side of things, and then 38.85, 38.86. Now, if we break through and confirm this and confirm through the 39.13, I think we could see another huge move down. If we break through this considerably, we could touch this 3,800 by next week. It's really just going to be what happens at this 39.12, 39.13 level, and then the psychological level of 3,900. But, the 39.13 has been both resistance and support on SPX recently. So when it's come to this level, you'll see, just here alone, so obviously this level alone, you're going to see this. This area is going to be important. You've seen the support, you've seen the resistance, you've seen support here before. Now it's testing it again. So we'll see. We will see. Also, low key kind of had a head and shoulders like here. I don't know. You have like a double head and shoulders like this. But anyway, so yeah, that's kind of what I'm looking for today on that side of things. I'm not trading the first 15 minutes of the day either because it's been working for me. Just not trying to get in or FOMO or anything like that. So I've been trying to wait the first 15 minutes, let things kind of shake out and go from there. Because trying to fix them or find a move before it happens has just fucked me in the past. And on top of that, I've learned to not try to find the top or the bottom. Sometimes, like I do, if it's like a perfect setup, what I mean by a perfect setup is like 4 or 5 different pieces of confluence, then I'll maybe get into it like I did yesterday where I'll get a put when it's coming up towards a key level. But that's another thing where it's another part of my rules. And just so everyone knows this, I know I kind of posted this yesterday, but you guys can get a kind of a sneak peek. I have some stuff coming out here shortly. That's I'm working for. If Nix is in here, because I'll show him this real quick, but it's coming. I know I've been saying that, but it takes a bit to put everything together, especially for I'm not gonna half-ass anything that I give you guys. I got my own full-time day job, so doing this on top of everything else, I also am not just gonna half-ass it. So, yeah, have it. So I'll be sending that out or getting that to you guys here, hopefully in the next week or two. But another thing that's been really important to me is, and a part of the key rules is only playing off of key levels. So key levels are extremely, extremely important, and only playing off of those after you get a confirmation is what is and has been working for me. So yes, a key level could be an EMA or VWAP or something like that, but almost more importantly is like this right here, this area. Like this is both VWAP and a key level and a major key level at that. And then I'm still huge on, volume confirmation on everything. So you'll see this rejection on increasing volume um, on this side of things. So again, I mean, we just crushed that yesterday, but that's like a perfect setup in my eyes. The EMAs are on top of each other, so there's some indecision. Um, but then on top of that too, you have the goose fibs. And so the good thing about the goose fibs is that they work pretty much any point in time. So you'll be able to see, kind of depending on the time frame that I'm working on, and working off of, you'll see the levels that I get, but you'll see that there is some consistency to it. I did make new fibs today because of the big huge move yesterday. So that's why you're going to see this here. And I have this and I post my watch list and stuff on the website, the DGen Day Trader website, so you guys can take a look at that too. But today is a day of patience. Be patient. You don't need to be the first one in a trade. That's another thing I've learned. Also, scale in and scale out. For every trade, I take at least 2 contracts so that I can pay for the first one, leave a runner, and then you need to set a stop loss on that runner to at least break even so that no matter what, you take gains. Yesterday, I'll say this, I had quite a few 39.85 put contracts, and I got them at 570 or something like that, and it ran to like 45, 50 bucks a pop, and I didn't leave a runner. Could have had quite a bit more. But I also was scared shitless from what happened to me on Friday, because I was fucking degenerate piece of shit that thought I was the man and was golfing while I was trying to like day trade, like bragging to my friends, and then went to shit, but whatever. Shot in 87 is what it is. They can suck it. I'm sorry, we make it up this week. So, like I said, this is kind of how I go about it. My levels and my stuff really look like this. And my charts look like this. Honestly, with the goose, I use that more as levels of confirmation and price targets, just because I really think the psychological side of trading, especially with a big, a big ticker like SPX, obviously, it's going to have a ton of volume. It's going to represent a lot of the mindset of retail. So having that aspect of the psychological trading side of things, and those levels that Fibonacci levels come with. What's up, stud? How we doing, man? Hope all is good, bro. Appreciate you guys popping in here. And then I'll actually go into Camarillo pivots, because I know people aren't really sure when I started using this and why. And so the reason it looks like this right now is because today hasn't started, obviously. And so once the day starts, this is when this will disappear, and this will show up over here. But what Camarillo pivots do is they are another mathematical equation that represents the psychology of traders. And by traders, I mean retail traders like myself, or any of us, really. And so it is like a different take on the Fibonacci side of things, which is another equation that represents the psychology of trading in the stock market and the movement and things like that, and how the whole population approaches it in terms of the different levels. But this is a different kind of micro version of that. where it takes the previous day's closing price as its midpoint. So you'll see like the midpoint here, and then it will take the high, the low, the open, the close, um, the previous day's open or the overnight high and overnight low, and it will go through this calculation as to what what the actual ranges should be based on that uh, that mathematical equation. So, and the basic idea behind the Camarilla pivot is that the price has a tendency to reverse until it doesn't. And so, what that means when you're looking at this is that in this intraday side of things, it should hypothetically just reverse in these two zones based off of where this was yesterday. And when it breaks this and it hits this side of things, which is another part of the equation, which is pretty much just intraday support and resistance levels, if it hits this and tests it and confirms through, then you have your targets above that from another psychological level because bears lost that level. Bulls are going to be pushing, bears are going to be defeated, and they're going to try to hit this, and then that's their next level that they're going to mess with. So, yeah, essentially, the pivot points are, and the part of the equations are the previous day's close, previous day's high, previous day's low, and yeah, this is here. This is the actual equation. So, it is based off of the psychological mathematical equation that we kind of go to on a day-to-day basis, and that was found back in the early 1900s. So it's pretty again, I really enjoy the psychological side of trading because I think it does give you an advantage, especially because I think trading is so psychological in terms of managing risk and how you approach it. So having these things where you can use as a part of your toolbox, I think only help, especially for a very high volume ticker like SPX, and so and large cap like that. It's going to have big movement. It does have on average around 35 to 40 point movements throughout the day. Obviously we have other days where it's huge like yesterday where it could be 80 90 points. But even 30, 40 points in the day and trading zero DTE, which what I usually do, it can be stressful, but it can be rewarding. There is high risk, high reward. A couple things that I've noticed is that one, I won't trade the first 15 minutes of the day. Two, I close all my contracts out before 1 p.m. that I have on. Because typically, I'd say that I, on average, hold contracts for at least like a half hour. That is, I would say I hang on a little longer than a traditional scalper, but the reason being, I really focus on these levels as kind of my targets. And then I still have like my supply and demand levels here that I go off on the hourly that I work on. So like it's not like I don't have other things that I use, but it's gonna be but I try to use as much as I can to my advantage. Psychological has worked for me, and so Camarilla pivots have worked. The daily key levels from Bueller have worked. Still using, MACD volume, buying, selling volume is still huge to me. Patterns are still huge to me. Pretty much as many things that I can use in terms of confluence, which brings me to my next point, which is I don't take a trade unless I have at least 3 pieces of confluence to back up the reason behind the trade. And one of it has to be volume related. Whether that was like yesterday where it was rising price and lowering volume, or volume increasing in a certain direction. to confirm a trend. So that is how I go about it each day. So this is kind of what I look at on the day-to-day basis. So I'm working through here. I'm looking at this, and then I'm constantly switching from the 5 minute, the 15, kind of just seeing what the trends look like because you need to look at different. That's another thing I needed to work on, which I didn't do before, which is learning to look at other time frames because that will influence smaller time frames, obviously. So, um, just continue to like challenge yourself. And again, the reason why I'm doing this is because one, I'm new. I know I'm new. Teaching others or helping others or even just talking about it, I feel like helps me learn more. Um, I do think, yes, I have put in a shit ton of work, a shit ton of hours since January in terms of like studying and trading and winning, losing, success, failure, making 10K in a day, losing 21K in a day. I've had it. I've had it all. So don't feel like you're alone or don't feel like intimidated to reach out to maybe some more tenured people that are in the discords. I'm not a veteran in this world at all. So take everything that I say with a grain of salt. This is not financial advice, but don't forget to go full degen though. And how about those fucking Giants, huh? 1-0. Let's go, baby. Never a doubt. Uh, let's make some fucking bands today. How about that? Shall we? Um, I'm trying to get a feel for what the day is going to be. I think there might be some relief to some point and to some degree today. I do think we test 39-13. If we break through that, it's going to be blood, blood in the water, jaws. And we could like even test this gap down here, another 100-point day. Um, so I'll be in I'll be in the Discord. I'll be posting my plays when I have it. I'm trying to do not as many plays and stuff that's more, I would say, closer to like in the not in the money, but like a little closer to the amount that ports can afford. Because I do, know that maybe because my port has grown a little bit, I've been able to get a little more aggressive as being closer in the money. I do think that that's how I grew my port pretty quickly is something that Keanu Trades, told me he would wait for one or two close to perfect trades. And when my port was, 2, 3, 4 grand, buy two contracts at the money and make good money right there quickly. So again, make sure you follow your own shit too. Do what's right for you. Don't overwhelm yourself. Keep it simple. If anyone's got like questions or whatever, hit me up. Down to help out however I can. I'm still gonna be in like the noob channels and rooms asking questions because uh, I still don't know shit. But we'll see you guys at the fucking moon, huh? Shall we?